there, welcome back to the channel where we turn real estate curiosity into real cash. So go ahead if you're new here and subscribe so we can stay in touch. Today I'll be looking at, there are a lot of debates in real estate investing, but this particular one is a big one indeed. We're looking at single family versus multi-family properties. Stick with me here because by the end of the video you will understand which one best fits your goals. So let's start with the basic. When we're talking about single family housing, it means one unit, one family, one roof. When we're talking about multi-family, we're talking about many units in one building, like duplex, triplex, and other building complexes. Both markets are massive, but they behave quite differently. Single family homes tend to have higher vacancy risk because when the tenant leaves, everything stops. But the multi-family, one unit that is vacant barely dents the cash flow. It's like a mini portfolio under one roof. The bottom line is this: if you want to have more stable cash flow as a beginner, multi-family gives you that diversification. When it comes to financing, this is where two of them actually split apart. Single family loans get easier approval using conventional mortgages, of course, usually between 20 and 30% down with lower interest rates. Multi-family loans requires that you often get commercial financing, higher down payments, slightly higher interest rates, although it is equally open to SBA programs or more creative options. Single family is simple: one tenant, one lease, one set of repairs, perfect for DIY landlords. Multi-family, more lease, is more repairs, more moving parts. It usually gives you the chance to run a mini business and scale quickly with a property manager. If you like simplicity, start with single family. If you are fine with more activity and a bigger reward, multi-family is your lane. When we look at the market dynamics and appreciation, single-family homes shine in suburban areas, school zones, and fast-growing markets. They can appreciate fast in the right location. Multi-family shines in urban areas, college towns, and rental-heavy regions. Appreciation is often steadier and less sensitive to emotional buyers. If you want a quick appreciation, go for single-family. Want steady cash flow and stable long-term growth? Go for multi-family. When we look at the tax advantages for both single and multi-family units, both are with great tax specs. Single family, you can always have your depreciation, mortgage interest deduction, repairs and property write-off are included. In multi-family, you have larger depreciation, more deduction, better structures for LLC and holding companies. And yes, you can use 1031 exchange to upgrade into higher buildings over time. When you look at the risk profile, here's the real talk. Single family has higher vacancy risk, lower upfront cost, and easier to manage. Multi-family units require lower vacancy risk, higher upfront cost, more management work, but more insulated from market swings. If you want lower capital and lower complexity, single family wins. If you want diversity and big returns, multi-family is your lane. Assess your capital and your reserve. Choose your market. Compare loan options. Get a great property manager. Do your due diligence. There's no shortcut here. Every number matters. Close, manage, and automate. Mistakes happen, for quite sure, but the right process helps you avoid expensive mistakes. If this has helped you, I'm glad it did. What would you be considering? Are you leaning towards single-family housing or multi-family housing? Thank you very well for watching. Until next time, keep investing smart and stay curious. See you on the next video.